turnaround Tuesday, everybody. How's everyone doing? Hi, Glenn, Phil, Brock. How are all my trading warrior brothers and sisters? I'm doing pretty good, Deepak. Thanks for hanging out with us in face. So I just want you guys to see what happens during a pandemic, no haircut. I'm wearing my beetle cut. I have a beetle cut going on right now. Hey, look at the crowd behind me. Volgi still has that up. I like it, Steve. Yeah. Trader Summit still there. All right. Look at all those people. That's you guys. All right. So enough of me. Ziggy. All right. So gold had a key reversal day yesterday. So last week and the week before recognized this as a triangle that could be a wave 4. Oh, now you change. You talk me out of my long euro and short dollar positions. I can't follow you anymore, FX trader. And you're bearish? Okay, I'm gonna have to fade you for at least a rip now. Buy the euro now. Okay. I'll tell you what, I know some people that are willing to pay you right now so they could fade all of your ideas. Are you interested? All right, I'm just playing with you. Anyway, so we had this key reversal, talked about this being a triangle, and what usually happens after triangles, you get a terminal thrust, okay, which is what happened on Thursday, and then we had this little breakout follow through on Friday, closed at 41, took out all the stops here and had some follow through on Sunday night. Actually got to a 1.272 number I had up there. I don't know what it's 1.272 of, but with all the fibs I have up here. So how now, brown cow? So we also have it, and it's very early in the week, and silver hasn't done any of these negative things. I'm a mean man. I wouldn't think that, you know, I'm a follower. I'm a follower of you know, Jesus, and I'm a mean man. Anyway, I used to be meaner. Anyway, so we'll see what kind of week we finish with. It's going to take some downside to get a 2-week reversal, come in around 1700. Okay, 1700 would be a 2-week reversal. And remember, like last week in the S&Ps, we got to the off number but closed above it. So what's really key for me when I look at the gold chart right now is holding the breakout. Okay, so this breakout's coming in between 717 and 720-ish, some moving averages here. The only constructive thing I could say is RSI readings on some of the different time frames. Okay. Okay, so right there, 2 hour, you can see above 71. The 1 hour, but you know what? The macro stuff had massive glaring divergence on the weekly. Look at that. But I mean, that's kind of long term to trade against. And here's the daily, same type of thing. So we'll see what happens here with the gold. I assume there's going to be dip buyers. They're already trying it here. We don't even have to get all the way back down here. So we'll see what happens here right around this 1720 level in the gold. Something else that I was talking about last week, I think Blake's comment was, you know, SNB is controlling it, and and Steve said use max leverage on this pair, and you really didn't need to use max leverage, did you? Euro Swiss. So talked about all the compression building up in here, and the old Wall Street adage, never sell a sleeping market. This was comatose. It was an EKG of a guy in a coma, and it now has a heartbeat. I think shade under 108 is doable during, now that FX traders bearish a dollar. We have the green light for the euro to perform. Also last week, Blake did point out that the euro against most other pairs was acting pretty good, and the only thing it wasn't, the only thing, I'll leave it for the other guys. The only thing currency it wasn't performing against was the dollar, and that finally kicked in. One last thing I want to cover is yields, which go along with a constructive view on US dollar yen. And I guess if the S&Ps, okay, and I guess if the S&Ps finally correct, it could abort again, but sure looks like 10-year yields are coming out of here, and I don't know why we can't go to 140 because of what the Fed is doing. I don't know. I think the only thing that's going to prevent yields from rising would be an S&P sell-off here. So there's your 10-year, there's your 30, which is even more buoyant. Looks like it's about to break out from this 145 level. Don't know why we can't trade up here. And here's TLT. You know, there's a lot of space under here. If we finally break down, we've held it here, here. Thought we were going to break down again here, and had one more hope bounce, and here we are again threatening the support. So this looks pretty vulnerable to me. Oh, okay. Oh, you're Ariel. Okay. From Twitter, right? Okay. Oh, there you are. Okay. So I'm going to save the questions that you have for the team, and they could go over, maybe some of the looks that we're getting so that you guys subscribe today. Okay. So that's about all I have to say for today. And I guess the biggest news of my opening here is FX Trader is bullish euro. So I'm booking profits here. And I want to thank everyone for hanging out with us every day. And, I want to say this, that if you're benefiting from this, and I'm a big believer in two-way streets, really the way to say thank you is to become part of the community. And that's how you reward the team that they work multiple hours. Blake and works multiple hours for the analysis. How do you think he could come on the air and have so much conviction about every chart he pulls up? You think it's because he woke up at 4 a.m. and took a look and, he could do it? No, it's all the time he spends and all the alerts they put out. So he's so in tune. He's looking at what all the other team guys are saying. And so he's really, I have to admit, I do a lot more preparation on the weekend than I do during the week. And then when I run out of my weekend ideas, I just wait for the next week. So you may want to consider at least taking a trial here. And I really think to give anything a chance, including a subscription service, that you really have to give it 90 days minimum. So here you go, 10 pips a month, pretty good deal. I know FX Trader, every time he clicks his mouse, And you know what? I would bet out of all the people in here that you risk 10 pips every time you wake up every morning. So you spend 10 pips for a month to get the whole team. Pretty good value, plus the push notifications, everything else they have here on this website. You know, I think this website would be worth it even if there was zero analysis and you just had a chat room to go to after face. Who agrees with me? And not subscribers, I know that you guys agree. Okay. Who's going to take the step today and invest in their trading career? You've seen what I'm assuming these are subscribers already. Okay. If euro goes down, you will. Okay. You know, you more than anyone else that comments during the day need this. Raj, okay. Hey, thanks for joining us, Raj. Any new people? Because I could get a hold of Joe. Maybe he'll work something out with you. Joe's a pretty nice guy. He's a soft touch. You want to talk to Joe? Okay. So if you're interested in this and need some help signing up, Joe usually drops into Face, exchange emails with him, and who knows what he may work out for you if you want to go semi-annual or annual. Okay, he has some flexibility. There's Joe. Okay, so today's the day, right? Never a better day to take action than right now. Okay, so I'm going to pass it over. There you go. I'm going to pass it over to Blake. What are you thinking in here today, Blake? Nice trade yesterday on that scalp on the long side of USD MEX.
Oh, thanks. Actually, you know, I was where I made my money is long the euro yesterday. It's I went long pretty aggressively yesterday when we just before we broke through 109. So that was
Yeah.
that was good. I mean,
Grab the screen and show it. Show it to
yeah.
the.
First of all, let me get over to. So yesterday, right through here as we blasted through this 108.60,
Yeah.
I went long pretty aggressively, and I had probably one of the bigger positions I've had, I want to say, since the beginning of this year, intraday. So, and it, you know, felt like we were going to break out to the upside, and
Nice.
we did. Yeah, and you know, we took out the highs, and I was already prepared for euro strength, and if you you know are a ForexAnalytix subscriber, you just read through the analysis. I mean, for the last 2 weeks, I've been a very big advocate of the 108, 110 range, and not wanting to be too short down here. And then, you know, the euro firmed up against this trend line. And then, you know, this news about a euro bond, or let me just say that the talks that have been happening between, well, they call it the Franco, let me see, what does Standard Charter call it, but their Franco-German agreement, everybody's calling it that right now. Commerzbank, I was just reading their piece just a moment ago, and then I was reading Citi's piece a little earlier, and basically the everybody's take bank wise on this Franco-German Eurobond, who's responsible, you know, COVID-19 response from the Eurozone. Everybody says it's a great start. We're not quite there yet, but it's lent to some strength in the euro. And so that euro is, you know, it's obviously it's strengthening across the board, and that's probably going to keep buyers on dips. And as long as equity markets continue to stay where they're at or higher, then that's it's going to keep the dollar under pressure anyway. So, anyway, that's what I'm kind of dealing with regarding the euro. And when the euro broke through the 50% retracement, this was easy money for me yesterday. And if you guys were in the chat room, you guys, knew I did pretty well there. I didn't hang on to the euro dollar overnight for this. I had buy orders in the euro to get long below 109. They never got triggered last night, but I've missed this upside move in the euro. But now that we're up against a 78% retracement and near range highs, I have no interest in being long the euro at this moment. Like I look at the euro and say, well, is there a reason the euro is going to get out of the 108 to 110 range at this moment? And the answer to that question to me is no. However, we have Powell is speaking today, right? Hold on, let me get out of this really quick. Powell is speaking later today, so that obviously could be a mover. Now, if you guys don't know where he's speaking at, here, let's just pull this up. So he is speaking with this here. Let me see. He's going to be testifying with Mnuchin as well. So that's just something to think about. This doesn't have very good information on it. Here we go. Testify alongside Treasury Secretary Mnuchin on coronavirus aid, relief, and economic security act before the Senate Banking, Housing, and Urban Affairs Committee in Washington, D.C. via satellite. So this could be a market mover. Now, the reason why I think it could be a market mover specifically today is because I don't know if the Fed chairman is necessarily going to, I think he's going to come at the market with negative rates that are not being discussed. The Fed can only do so much, and that might lend to further. Well, it could lend to U.S. dollar strength if he's like, look, we're our hands are tied here. You guys have to. This is we've done everything we could do. The dollar could strengthen, the euro could slump back to the 109 level intraday. It could pull the dollar up across the board. So you guys got to be prepared for that, in my opinion. And obviously the stock market's not gonna like it either. If the Fed's like, well, we've done everything that we can do for now, the stock market may come under pressure. Now, one of the reasons why I think that's a little bit of a risk here is because if you look at the S&P has been strong. The 200-day moving average is right here. I think what's most important right now is the overnight price action, where we had a failure of that resistance, right? A little breakout above the highs, failed up there. Look, if the stock market rolls over today, if the stock market rolls over from here, that's the risk, right? That's the risk. And we didn't quite meet the 200-day moving average. I personally thought that we were going to, try to make the 200-day moving average and maybe head to the 78% retracement. But, that's not the case as of right now. And if we close at the lows today, because of something that the Fed chairman said, that in my opinion could lead us right back to the 2800 level. This seems to me to be the range at the moment right here. But I was thinking that we would have an upside break, but I don't know. I mean, we have to really build on this. We have to build on a breakout today. Now, there's a couple things that I was looking at that might or were leading me to the idea that that we might break higher is, the dollar Mexican peso has been weak. The dollar Canadian's been weak. We're below triangle support at the moment. And, the dollar's been weak, but the dollar can strengthen, especially if stocks roll over. So that's just, that's something that I think we should all pay attention to. Oh, and I have to mention the yen. The yen is just screaming here. Look at the euro yen. We're almost at the, 618. Yesterday, if you use ForexAnalytix, and actually you could just go and, sorry, let me turn down my speakers.
Great call by Grega.
Well, if you read the analysis for the euro yen, you just go to last week, last Thursday, a big bounce from the 618 retracement support, which may put the 116.50 level in view ahead of the weekend. Okay, because remember, we were playing this inverted head and shoulder pattern for those of you that were not listening in last week. I was long the euro yen last week, so that would be right here, right? I was buying the euro yen down here at the 115 40s. I did not expect this big of a move because I thought the downtrend line was going to hold it. So once we snapped through that downtrend line, 116.50 ahead of the weekend. You can see 116.50 ahead of the weekend. Then, like yesterday, the euro yen broke the downtrend line, which puts the 50% retracement into play, which is also the 161% extension. We broke that overnight. That's this level right here. We broke that overnight. Whoops. And now we have, the 618 coming into view. And one of the reasons why the yen is so weak right now is the Bank of Japan announced a surprise meeting on Thursday. People think that the Bank of Japan is going to continue to, make it attractive for people to lend. They're going to try to entice people to lend a little bit more. And there's a lot of speculation around what's going to happen on Thursday. So the yen is extremely weak. You can see it's not just the euro yen. The pound yen has broke a downtrend line. The Aussie yen broke the gap fill here, 70-20. Looks like the Aussie yen's heading up towards 72 yen. New Zealand yen, false breakdown below this triangle over the weekend. Looks like the New Zealand yen's heading up to 67. Canadian yen broke the downtrend line. Looks like we're going to back over to 78 and change. Look, the yen pairs look very strong. So this is one thing that I'm looking at that makes me feel that the stock market might not be ready to come down because I'm seeing the yen so weak, right? So again, I'm seeing conflicting things here as far as the equity markets go. I could argue for them to go higher. I could definitely argue for them to go lower. So I think what we're going to have to do today is really wait for the Fed chairman to talk, which will be here in an hour and a half, and see what he has to say and see if he is going to really move this market. I think he's going to be the one that what he says is going to be the make it or break it for equities. And then once we know what equities are doing, I think we know how to respond with the dollar, which is pretty simple. Equities down, buy dollars. Equities up, sell dollars. It's pretty cut and dry. At this moment, yen pairs, stocks go up, you got to sell yen. The yen pairs are going higher. Euro yen, dollar yen, all that, all the yens, right? Dollar yen looks, I was buying the dollar yen last week below 107. It's, I don't own it right now, but it looks like we're going back to the 200-day and maybe even higher. So, because we came out of this wedge. So anyway, that's it. I think we got to wait around for Powell. I want to hear what my colleagues have to say. Steve, Stelios, Coach, what's up, guys?
Good morning.
Morning.
Everything's good. We're all good and healthy. So that's number one. Yeah, I think I agree with you regarding Powell. Equities, I still think we're seeing this flush of shorts and the FOMO crowd getting in. I'm personally not convinced about this recovery and the vaccines / cures / everything saving.
Of course
everybody.
You're not. That's why the market's gonna climb the wall of worry because of people like you. Continue on. Sorry.
No, it's okay. No, you're right. It makes it's for me it's kind of logical not to be not to get ahead of myself and say, look, everything's fine. We're going back to all-time highs. But that problem is because it makes sense. I think a lot of people have been this way. And I'm not short, but I'm not long either, equities. So I'm waiting for my bids well below and see what happens.
Yeah. So today, and by the way, I was short equities into Friday, and then the move yesterday stopped me out, and I'm like, it wasn't big. I was just kind of taking a a lot of people like to say, you know, you're taking a punt. I was taking a punt on it. It was a small position, which I was really happy about my euro yesterday because my euro was a huge. I mean, I was I was aggressively long, like when those German headlines came out. I was aggressively long the euro because I felt we were going to go through here, which is great because it eclipsed any loss that I had multiple times over. So it's like it was no big deal. But I in the equity markets, I haven't been too committal because I really, you know, I really think that we can still go higher. I'm just kind of like trying to catch the top, if you will. But you know, I think Powell's going to drive. He's gonna be driving. You know what's happening from here. Really, I mean,
yeah, I agree with that.
It's hard to fight the Fed.
Like you said before, the dollar is driving everything. Equities and the dollar are driving everything. So
yeah,
you know.
So did you get any information on the Bank of Japan? What's happening on Thursday?
I haven't read anything specific. I if they've said something specific, I haven't seen it. But I think it's going to be announced on Thursday, whatever it is, and we see how it goes. But no, I didn't see anything personally.
Okay.
Like you very correctly said about the Germans and the French proposing a 500 billion euro package for the European Union, it's a good start. And it's obviously welcomed by everybody. It's always good to get money. So that's good, I think, and that should be supporting the euro. But again, we're living in a world now where it's one headline after another and things can completely change from one day to the next, literally. So, you know, I'm not basically trading on the back of headlines at the moment.
Yeah, and you know the news about this. I mean, you know, you're talking about this Moderna. I'm hoping, God, I'm hoping that by the holidays, you know, we have some sort of sense of normalcy in our lives, you know, for all of us. By the way, I think we have some data coming out.
We're doing 2 minutes, yeah.
Yeah, we have
building permits and housing starts.
Is it housing data?
Yeah. Yeah.
Okay, so we'll be watching that. Just let me move this out of the way really quick. Is Steve here? Did he make it in today?
I think so. He's online.
I am here.
Yeah, he's here.
Oh, okay. Hey, Steve. Hold on. I was just gonna say, you know, I hope by the holidays, you know, like I said, we have some sort of normalcy where we could spend holidays with our family and not really worry about it. But that I feel it's very unrealistic. And if you read about the race for vaccines, I mean, you know, we're going into human trials right now, and best case scenario, I think best case scenario is that this fall we're going into phase 3 trials, and then vaccines are going to be, if there's a vaccine, whether it's Moderna or whatever the name of the company is, or whoever else it is that is producing it. I mean, realistically, it's going to be spring before everybody's got vaccine, or at least it's readily available to most of the population. And that's best case scenario. So if you think about that, like timeline, that means that businesses overall are going to be somewhat hampered and limited because, you're going to take the majority of people, I would say over 50% of people that are going to have very limited activity until they know that there is a vaccine available and they've taken it. So, this recovery that we're seeing in equities, yeah, I believe it is going to be, we will find a high, whether it's 3,000 or 3,100 or something. And then once we find that high, the market's going to come to the reality that, hey, this is going to be a little bit longer term. issue.
I
Right.
agree. Okay, numbers. Let's see.
Global slowing economy wise. So housing data
Yeah,
came
broadly
in.
fine.
Housing starts came in weaker than expected, which you would expect. Building permits are up. Huh.
Overall, very close to expectations. So really, I
Yeah.
don't think it's anything huge.
Yeah. Not a lot of excitement there. But anyway, Steve, how you doing today?
I'm good, mate. Other than having to go through some stupid traffic, which was, I mean, reminding me of a different era. You know how it is now.
He came because he came to my house this morning.
Did he go to your house this morning?
Yeah. I gave him some bread and the coronavirus, everything.
Everything,
You gave
yeah.
him some
I got
bread
the full
with
package.
coronavirus. Nice.
Yes, yes.
You know, guys,
That's-
regarding the
that's-
virus and the vaccine, first delivery may be an issue, but there was a poll that said 30% or over 30% of Americans would not take the vaccine. Would you take it, Blake?
I wouldn't take an initial iteration. No.
See, so you're in there. You're in that
What's that?
30%. There's going to be hesitation, but you're not the only one that's going to say, well, they really rushed this thing to market. I'm going to see how it works on others first before I take it. And,
Yeah,
you know, there's
I
still
think that's going to be the prevailing attitude. I mean, knowing my wife, she's going to be like, hell no, I'm not taking that right initially.
Anti-vaxxer.
You know, I'm not growing a sixth finger type of attitude, but
yeah, but you know something, guys, the most important thing is the following. Don't forget that the important question to answer in this case is if the people that are more susceptible to you know, to having complications from coronavirus are willing to take the vaccine. Because if that part of the population gets vaccinated, you know, that's already a huge step forward. So people that have like a high risk factor, I think that the cost benefit analysis for them is different. So they might actually do it.
Right. Versus, and then you know, then you're right, and then you cut down.
I mean, why would I be persuaded if I was 20 years old, for example, to even consider it? I would be like, you know, no. I mean, no reason to, you know, to take the little chance. Anyhow, you know, the chances of complications are like close to zero for like young, you know, healthy people.
Right. All right. Well, guys, I'm going to pass it over to you. For those of you that are, you know, in the Forex Analytics family, I'll see you guys during the daily roundup webinar. Today is my my youngest son's just turned 13, so it's a big day today. 13 in quarantine.
Happy birthday!
What time's his bar mitzvah?
Yeah, I'm not Jewish.
Today he is a man.
Yeah. I taught him how to use a butterfly knife yesterday, so.
Nice.
And throw it.
Yep.
And then tomorrow I'm going to teach him some ninja skills. So that's how we celebrate over here.
Why you're bringing in somebody to teach him?
No. Studied martial arts my whole life, my man. All right, guys. I'll talk to you guys later.
I'll see you in the cage, man.
Sounds good. All right. See you guys.
Right.
Bye, Blake.
It's actually Andre's birthday today as well, so happy birthday,
Oh my
Andre.
gosh! Is
happy
Andre
birthday,
here?
Andre.
I don't know.
So Andre is
Roman on the phone.
Just turning 13, Andre.
Andre, how 39, right?
Yeah.
Happy birthday to you. Happy birthday to you. Happy birthday, Andre and Roman. Happy birthday to you.
Nice.
I want something special for the 12th of June, since I not only have birthday, but I'm changing a decade. So I don't know what you're gonna do.
Hey, 50 already, man.
Yeah.
Time
No,
flies.
70.
Shut up.
Right. So where are we? We are at the point where people think that we're gonna be much better in 3 to 6 months from now. There was some data out of Germany and the Eurozone today, ZEW. Current conditions worse than expected, really huge negative number. Economic sentiment, which tracks what people think is going to happen in the next 3 to 6 months, much better than expected. So actually, economic sentiment went to 51, so above 50. from 28 last month. So
and I think a real conditions index was minus 90 something.
93, yeah, minus 93. So probably as bad as it gets, current conditions, and really optimistic in the future. I hope they're right, but I kind of doubt it. Other interesting data today. Take a guess, Steve. Car registrations year on year. Germany, France. Sorry, Germany, France, and Italy. Okay, year on year. In Italy, minus 97.6%. So that's
yes, but I bet you, from what I see here, I bet you that every single one of those sold was a Tesla.
Yeah.
Every single one was a Tesla. There's no alternative.
So similar, right? Yeah, similar numbers in Germany, France, minus 80 something percent. So we're seeing it in the real economy, and no doubt this will continue for a little bit longer. But as I said before, the sentiment and the projections are that these are going to go back to relative normality pretty soon. Let's see about that.
I'll take the under in that prediction.
Yeah, me too, unfortunately. UK, we had average earnings. This was running above 3% pre-coronavirus. Remember, the Bank of England is always looking at this and comparing it to inflation, because it's a real indication of if there's a pinch on the average consumer regarding inflation versus earnings. And this has been consistently above 3%, and inflation obviously has been quite low. Now it dropped to 2.4% year on year, but with inflation 0 point something, whatever it is, there's still a pretty healthy gap. But obviously this is also grinding closer towards zero. We also had unemployment claims. This is a monthly number that's usually between plus or minus 50K jobs. It was 856,000. So this is probably the worst reading I've ever seen. I think it is actually the worst reading I've ever seen. To be expected. Again, the UK also has been showing some pretty dismal data, and especially they were one of the last countries to lock down. So I think April and May data for the UK are going to be pretty horrific.
Yeah, most likely.
Yeah. So other than that, there's no news regarding this Moderna. It's not a vaccine, actually, from what I've been reading, and I'm not.
Donald, by the way, just wrote about it, Stelio. Last night on the news, they said that the Moderna vaccine has only so far been tested on 6 people.
Yes,
so he says market manipulation in the sense, that's not even a sample of people that matters.
That's what I read, that the sample size has been small. Also, that it was tested
on 6 is not small; it's non-existent.
Yeah.
I mean, from statistical perspective, it's like.
Yeah, and also I read that this is something that was effective against one strain of this virus, but which is not the dominant one. But anyway, I'm not a specialist, but I have some doubts about this and see how it is. Also, the other thing I read, and again, I'm not a specialist, but there was an article that was saying that this thing kind of, I think it alters the DNA. Its plan is to alter DNA so that the human body can respond better. I mean, altering DNA. If you hear these words, I'm not going to be testing this. So I have my Ziggy, that's funny. I'm not going to be rushing out to you to take that. Let's put it this way.
On a positive note, you've already had as many kids as you wanted to have.
Yeah, that's true. Actually, my job is done.
Yeah. There's rumors it grows hair.
Like
that drug Propecia. Remember that drug? Ever hear of it? Guys would take it so that they could grow their hair back, but it made them impotent. So they'd get the chicks and couldn't do anything about it. It would have been better off going bald, don't you think?
I like being bald. It's very convenient.
I thought you would say I like being impotent.
If I ever see a Stella, I'll wear my shades so I don't get blinded by the glare. All right, buddy?
Yeah. Yes,
all
sir.
right.
So the markets are still quite optimistic, and even though equities are a little bit lower today, overall they've done very well in the last few days. And this is a characteristic of the markets. They're very quick to price in hope and good news, and they're always slow to pricing the bad.
To be perfectly honest, Elio, we have to add to this sentence that they're very quick to jump on hope, knowing that there is a Fed having their back, because it would be totally different if the market was left, free to rebalance. For example, we were going into this period with expectations of 10% earnings growth. We ended up having like a downgrade of 10% to earnings, and the market is almost at all-time highs, just hoping that we can eventually get the earnings growth that it was already pricing in.
Yeah, we've said this so many times. It doesn't make too much sense. But again, when a lot of people are the same way, you see market action, which doesn't make sense in the beginning. Anyway, let's see how it goes. But I agree with all your points.
I think a lot of people are having a hard time understanding. I'm having a hard time explaining it to people that are layman's in the market. They're going, Dale, with what's happening to the economy, why is the stock market doing this? How would you explain it to someone with a question like that, Steve?
That the stock market doesn't at all reflect anymore the economy on most occasions.
It's been commoditized.
Yeah, because it's a manipulated product, for many and various reasons. Some of them, especially in the US, have to do with the fact that pension system, with 401ks, makes it so that in essence
have to go out and take risk.
Yes. I mean, the system is such. For example, in Europe, I don't know if Americans are aware of that, but in Europe, mentality is totally different. I mean, a small percentage of the population even bothers investing in stocks. So it's not the same mentality as in the US. In the US, you anyhow have insolvent social security systems, etc. I mean, projecting down in the future, which that applies to almost all developed countries, right? I mean, the vast majority of them have really no money to honor, past commitments in essence. But at least, in the US, you have the ability to invest in the stock market and other assets, the money you have on the side. And, that is a double-edged sword, because on one hand, when the stock market goes up, somebody that in essence can really benefit from the money they've already set on the side. But on the other hand, if the stock market is left to collapse, imagine that this is a double whammy, because at the same time, let's assume you leave the economy collapse along with the stock market collapse along with the economy, you have individuals that are getting hit from both directions. Probably they're losing income because of the economy issues, and at the same time, they're losing whatever wealth they have.
Wealth effect in reverse.
Exactly. So it's a wealth effect in reverse. So it's a double whammy. Now, I'm not advocating that this is a reason to manipulate markets, because at the end of the day, manipulating markets brings, a lot more negative side effects, and a lot of the problems the economies currently have began from the fact that they started initially slowly and then doing it more and more, manipulating the markets in order to sustain an economic model that is unsustainable for longer than it would have naturally be possible to exist. Anyhow, having said that, from a technical perspective,
so how do I explain it to someone? I have to have you with me, and they'll walk away. They'll walk away and go, huh? Anyway, all right.
So having said that, it is more than clear that we're very well bid here. I mean, the recent price action here in the S&P might as well be a triangle. That would imply another push to the upside. I still believe unquestionably that the risk reward is extremely bad in being long up here, extremely bad. But that doesn't mean that we can have another push to the upside. I think from what I see on the chart, it is extremely likely, right? So, the path of least resistance from a technical perspective, so completely decoupling economic reality, seems to be to the upside. I would be very skeptical, though, after we have another move to the upside. I think there is a very good chance that we're going to fail. Now, possible areas to do that if we assume that we break up from here, because we're currently testing resistance. So, we're already on resistance. Next upside target would be 3015, and above that would be 3075 or whatever it is. And we also have the confluence of resistances at 3,137, which is the 78.6 from the all-time high, and some horizontal support resistance area. Now, any of these areas can be hit before we see a deeper pullback, but definitely the recent move so far doesn't show to be anything other than a consolidation. Okay, now, DAX more or less the same. It was looking like it would break lower, but...
So we bottomed in spring on the equinox, March 23rd, 24th, and spring ends in another month. Maybe that's what this is, a spring rally that terminates in June.
I don't know if it can be sustained
Another
for
month?
that. Yeah, I mean, not unlikely, but personally, I would think that we might fail earlier than that.
Yeah.
But
it's interesting, though, that turn did take place right on the equinox.
Yeah, I don't pay attention so much to that, like the full moon or whatever. I'm not saying that these things might not, work. I mean, I know people that are, very good that, use some of those signs, but personally I don't. I just use, price action, and I don't really care. Fundamentally speaking, it's one thing, but that timing fundamentals is a very hard thing. So you need to use fundamentals just as a top-down approach and to have a general direction, and then I use technical analysis. In any case, let's say if a full moon matters and it plays a role, that still is shown on a chart. So by in essence trading a chart, you're trading whatever might be affecting price. So the DAX might as well do the same thing. 11,550 is the 61.8. Here's the FTSE 100. It was the weakest. It remains one of the weakest. But it looks like it might also, push once again to the upside, because this recent correction was, quite clearly a correction after we got that rebound. I mean, you can see that this price action was overlapping, and in essence, we didn't go anywhere. So 6,400 is the next upside resistance I would be looking for there. In any case, seems like, we might have some more risk on. Now, you already mentioned it. It was one of the first things I wanted to talk about today, and it was this one. The huge breakout we got yesterday in the Euro Swiss. We had already mentioned that this is a possibility. So this is legitimately a breakout, which means that any pullback, as long as we stay above 105, is probably a good buying opportunity. I don't expect it to go, places. I don't expect it to move really much in a short period of time, but you never know. And the downside seems to be more or less capped by the S&P at 105. Now something really disastrous will have to happen for them to let that go. It's not impossible, keep that in mind. That's always a risk, but under normal circumstances, they seem to be holding that as an area of support. Now, this is USD Swiss, by the way, since we mentioned the Euro Swiss, since we mentioned the Euro Swiss. As you see, we had a big move higher yesterday in the Euro USD, but the USD Swiss did almost nothing, And why is that? Because at the same time that the euro was moving higher, we also had the Swissy moving lower. So, USD, Swiss didn't really do much, closed the day with a spinning.
Did you triple your margin for that move in the Euro Swiss?
No, I
you
didn't
said
trade it at all.
You said use a lot of margin because
I said that if you want to
slow.
trade it, you should do so, but I didn't even bother, and I don't really care.
Oh, it was a nice move.
It is a nice move, but was never really looking to participate in that.
Classic, never sell sleeping market.
Yeah, I mean, I made some good money when the S&P had the floor at 120. And to be honest, because it's a good thing to learn, to learn even from mistakes that you didn't end up paying, I was extremely lucky when they let the floor
when
go.
They pulled the plug. Yeah,
I had a big position long. I have no idea how that happened. I had a stop loss, of course, at 119.75, and I got filled. I have no idea how that happened. I don't know if the orders were served first in, first out, because if that's the case, then I know how that happened. Because I held that position for a long period of time, and I was scalping. So I had a main position on, and I was like, every time the Euro Swiss was rebounding like for 30, 50 pips, I was taking some profits. And then when it was back on the floor, I was adding. To be on the safe side, I had that on a separate trading account. So it was completely segregated, from my normal trading account. But still, I assumed they would ask me to pay for for whatever it was, negative. But I actually lost almost nothing because I got filled at 119.50 something. So I had like slippage of like something like 15, 20 pips or whatever, which was nothing. But I told myself, okay, I'm not doing that again, even if we get another floor at some point. Euro yen already mentioned. Kudos to Grega, big breakout. Now I'm on board, as you understand. I mean, I do believe in this breakout because as I was saying, for me, the criteria here to say that, I would be interested and I would be looking higher would be breaking this descending trend line resistance. We did so and emphatically. So I don't really see any resistance before we make it to this confluence at 119.60 something. And I do think that if we also break through that area, then there is a lot more upside coming in the days that will follow. Now, USD yen obviously, still hasn't broken through this range, but it remains well bid within that. But as I've said for the euro as well, people might want to play this. Personally, I'm not looking into doing anything with it because it's been in this contracting range for such a long period of time. Recently, we also had these three false breakouts, one to the upside, one to the downside, one to the upside, and then back in this range. So, I think it's a very dangerous game trying to, trade this market because it's, very choppy. Now, Euro USD did provide a nice rebound. It made sense trading it to the upside because we've been trapped in this range, the 1075 to 110 range for quite some time. So from a risk reward perspective, being long there made sense. Now we are approaching the 110. So once again, being long close to 110 makes no sense, right? As it was being short close to 1075 made no sense. Same applies now that we've approached 110. I'll repeat once again my long-term thesis about the Euro USD. I think that the Euro USD is clearly in a downtrend. I think it can slip even lower, but I strongly believe that the next big move for the pair is going to be higher. Now, this can be from lower. So it is likely that it's going to depreciate further in this slow manner that it's doing so. But I think that once we see again this pair going alive. I mean, really starting to produce moves with follow through. I think that's going to be to the upside. So personally, I'm not looking to be short the Euro USD. I'm looking to be seriously long the Euro USD, but not yet. And I'm pretty sure this is also going to be a very big pain trade for the market, because from from my experience, especially Americans, I see a lot of Americans being extremely bearish the euro, which seems funny to me, because I'm fully aware of the problems of both economies, and both economies have huge problems, both the eurozone and the US. But absent a breakout scenario for the eurozone, which is a scenario, right, and not an unlikely one, but absent this, so assuming that things will remain calm on that front, I really think that euro has a lot more upside potential than the USD. I actually think that the US dollar is extremely overvalued from a fundamental perspective here. Anyhow, metals. We have questions about the metals. So silver is stalling at $17. Already quite a beautiful move here. Even just by extrapolating an extension equality target, that would probably take us at 119.30. In any case, clearly overdone in the short term. That doesn't mean it can't go higher, but be careful here. This 1730 area is a confluence of resistances. I think, though, that you should be buying dips. I think that any pullback towards 1570 to 16 is probably a good buying opportunity, like something like this. And having to do with gold, gold, quite a nice reversal yesterday, but we've seen many attempts of reversals and gold doesn't really care about it. We still trade above this triangle. Theoretically speaking, we've already fulfilled the minimum target of a triangle. The minimum target of a triangle is to break out of it and test the waters at least above the previous high. We already did that because the previous high was at 1747. Yesterday, at some point, we were trading at 1766 or whatever it was. So theoretically speaking, we fulfilled the target, but I wouldn't be turning bearish even in the short term, as long as we're still trading above this triangle, right? So as long as we're trading above this triangle, the path of least resistance remains higher, and gold should remain quite nicely bid. Now, crude oil seems to be losing a little bit of a momentum, which makes sense because 25 was in advance, recognized upside target here. Now, having said that, I think that crude can potentially squeeze even higher from here, with the next target being at 29. Natural gas, quite a nice reaction. We already talked about it yesterday again, about this series of higher lows and the sequence of divergences on the RSI. So I think that above 1.6, as we said yesterday for like the billionth time, it looks good. We have questions. I would anyhow cover palladium because I forgot to do so yesterday. So platinum, we had already said about platinum that this looked like a triangle and there was a high probability scenario that would break higher and extend to the upside. It has done so. We haven't reached yet the next upside target, which I'm looking for, which is at 860. So 860 is going to be a pivot area because we either get rejected from there, or if we break higher, we should see a lot more strength. And palladium, I got stopped out yesterday on my trailed stop loss. That was another trade that was good for me. because we finally broke out from this descending channel. I mean, it was starting to be very clear that, momentum was diverging. It had already stalled there, and I think this is a legitimate breakout in the sense that it should extend decently. That's what I had drawn in advance, and I do think we can easily make it up to 2,250. So, especially if risk keeps being well bid, I expect Palladium to do well, to keep doing well. Bought a lot of physical silver, went down near 12. Some charts call for another low around 10, where I would buy as much as I can carry, says Diana. I agree 100% with you. I was also hoping, because I have physical gold, I was really strongly hoping for another low in silver, but I think I pushed my luck too much to buy some, not some, quite a lot actually, of physical silver as well. I don't know if we're going to get that, Diana. I really don't. I think there's a high probability that we're not going to get lower levels in silver. And fundamentally speaking, despite the big rebound to 17, silver is still extremely undervalued. Extremely undervalued. So I think there is a lot more upside for silver. Now, this is not a prediction like for the week, right? So I don't get misunderstood. This is like a 1-2 year prediction. I think silver can easily be, within a couple of years, more than double the price it currently has, easily. So a lot more potential upside there. I had short Kiwi Swiss and Aussie Swiss a day. Oh, yeah. I bet, Nick, that was not pleasant. At least you survived. That's what's important. USDMXN, yeah, absolutely. I can check it. So here it is. It's threatening with a breakdown from here. Now, I would be a little bit careful because initially we thought this is the triangle there, right? And then we had this little move. So we redrew the triangle. Might be, another case of that. So it's not, unfortunately, having to do with support. We don't have multiple points through which we can have a trend line and, consider it reliable. I had warned in advance that there is a little chance that we had already seen the high, and I had actually pinpointed to that peak we had over there, because that, typically speaking, this is not a triangle because this was a higher high. It might have been an intraday spike, admittedly it was, but sometimes an intraday spike is enough, to point to something different. So I'm not, very much convinced yet if we have already seen the high of or if there is one more high missing in this market. That's why I'm not trading it, because I'm a little bit torn here. One other reason I'm a little bit torn is because you will notice that they have some resemblance on some aspects with USD NOK, which clearly that was a blow off top there. I'm still short, by the way, both USD NOK and Euro NOK. So I don't know. I'm not so sure. I mean, definitely USDMXN is going to benefit if we get some risk off, but it will have the further away we move from the high, the risk off would have to last quite a long period of time for us to go back to new highs. So, I'm a little bit skeptical. If I want to be on the safe side, if I really want to be on the safe side here in USDMXN, before somebody calls that we've already seen the high, I would want to see a move below 22.82, that low there. Okay. So as long as we're trading above 22.82, I totally understand everybody that wants to be long and buying dips in this. But below 22.82, I think that things are going to start becoming quite dangerous for bulls. we might even see like a collapse from there. USD INR, yes, we can have a look at it. Here it is. Still in a consolidation until proven otherwise. That can easily be a bullish consolidation. Right, there you go. Now you do have a legitimate triangle, right? We don't have a higher high that we're ignoring because it was a spike. So I do think that as long as we trade, above this previous spike low at 74, I think that we can easily see another move to new highs towards 78.5, where we find the 161.8 of this move lower. So that's what I think about it.
Brent Johnson is here.
Oh, okay. Sorry, Dale. I hadn't noticed the time. So no more. We have more questions, but no more time to answer them. Tomorrow we're going to be back tomorrow. So whatever questions I haven't answered, shoot them then. Thank you, Dale.
Okay, buddy. Okay, Brent, I'm going to unmute you. Ask to unmute. I don't know why that's coming up.
Hear me, Dale?
Got you, Brent.
How are you doing?
Good. Thank you so much for. I know you're in the same time zone as me, Brent.
Oh,
so
yeah, no worries, no problem at all.
I appreciate you getting up and beating the Roosters up today. So great to have you back. I really respect your work and our interview that we had before was informative. Have you used Zoom before? Because you could share your screen.
I have. I don't know if I have a lot. I didn't really prepare any slides.
Okay.
But I'm happy
Okay.
to.
All right. Then I could share mine, and we can talk. So,
sure.
What I recall, and some of the things that you've had to repeat to a lot of different people, is that you're a precious metal bull, and
Yes.
you're a dollar bull.
Yes.
Am I correct on that thesis?
That is correct.
All right. So, a lot of people have a hard time understanding that. And a lot of people, I think, with what the Fed has done recently, Brent, with throwing tsunamis, waves of cash at the system, and then fiscally throwing trillions of dollars in relief for the shutdown. Most people conventionally would think, wow, it's going to end up just crushing the dollar. So in lieu of recent events, is your thesis about the dollar shortage still intact despite what the Fed has been doing?
Absolutely. And I think if anything, it's gotten even bigger, and this coronavirus issue that we have has made the problem even more acute. And so the main thing I think that most people forget when, especially when I speak to people in the precious metals world, is that, again, it makes sense. If you print a lot of something, or if you increase the supply of a lot of something, then the price should go down. It makes intuitive sense.
Right.
So the people that have done this analysis and come to this conclusion, I'm sympathetic to that view. The issue that I think many forget is that fiat currencies trade relative to each other. And if you want to do analysis on the United States and the debt problems and the amount of currency we're printing and all that kind of stuff, that's great. But if you only do it on the US, you've only done it on one side of the equation. You also have to do it on, against the euro or the Swiss franc or the Australian dollar or the yen. And the reality is that all those countries have the same issues that we do. And in many cases, it's worse. And then you also have to remember that they don't have the advantages that the U.S. dollar has, from being, we've got the deepest capital markets. We've got the advantages of being the world reserve currency, the U.S. dollar payment system through which, global trade takes place. And not the least of which, I should mention, is the U.S. Navy that enforces its use. And so, I think that's largely what's driving this, is the fact that There's great, despite the increase in supply from the Fed, it's still overwhelmed by the incredible demand for the dollar. So,
what are pipes, Brent? I've heard, some guys I mentor, I'm, pretty much a technical guy, and they talk about pipes from like emerging market economies. That's also part of it, dollar denominated debt, which is also creating demand for the dollar.
yeah.
With what's happened with the virus, you say it's actually exacerbated the case for a bull market in dollar. And just to give
Yeah.
people,
Sure.
kind of an idea of how bullish a dollar you are, you're not
Yeah.
just like a 104 Dixie guy or a 107 Dixie guy. What's a number that you think is probable?
Well, I think 120 will easily happen, and
Okay.
I actually think that we'll go back to its all-time high in the 150 area, and I don't
Okay.
think we'll necessarily go there and stay there, but in
Right.
some kind of a blow-off top, spiking scenario, that would not surprise me at all.
Is that going to
Essentially,
happen during risk off and all other asset classes under pressure? Kind of a deflationary spike with that
well,
happening?
yeah, I mean, I think it would be deflationary on a global scale because at the end of the day, a spiking currency through which all global trade is denominated in, that's typically not good for asset prices. I think you're better off on a relative basis being in U.S. dollar assets versus assets denominated in another currency. But in general, it would likely be a risk off scenario. The thing to remember is that when comparing currencies, and again, this is more of a structural and fundamental view. This isn't necessarily a technical view, right? You do great work on the charts and the short-term trading and the channels and levels of resistance and levels of support. This is more of a year to 2 to 3 year play,
Right.
just based on the fundamentals. The key determinant is the amount of dollar debt in the world, and it's not just the U.S. dollar debt. I mean, we all know that the U.S. is, what is it, $25 trillion in debt, and that's a huge number and it's a huge problem. But the bigger problem is there's almost an equivalent amount of U.S. dollar debt issued by entities outside the United States as there is inside the United States. And they do not have the ability to print the currency when you get into a bust, right? So when we get into these booms and these busts, the Fed comes riding in and recollateralize the system. You can think of it like a trading and a margin account. When you buy on margin and the assets go up, it's no problem. And that's kind of what they do in the global monetary system. People borrow money, they invest it in assets and businesses and different ventures. And as long as prices are going up, it's fine. But when asset prices start going the other way, you get a margin call. And so what does the Fed do? They come in and they recapitalize the system by putting new money into the account. Well, that same issue ends up happening outside the United States, but the problem is the foreign central banks don't have the ability to recollateralize the system because they don't have the ability to print dollars or to issue dollars. And so we've gotten into a situation where in order for the system not to crash, the Fed will have to bail out the rest of the world. And I don't think that the Fed will bail out the rest of the world. And I don't think, and even if they were to want to, I don't think that they have the capability to do it. In theory, they have the capability to do it, but politically, I think it would be very tough for them to bail out Indonesia if people in Indianapolis don't have jobs. I think it would
Great point.
I think it would be very tough for us.
And they kind of rhyme, Indianapolis and
yeah. I did that on purpose.
Yeah, I like that. And so with this type of scenario, how do yields come into play? Because we had that big blow off move in bonds. It took TLT to 180, and then they one of the biggest drops. I've been watching bonds for many years. One of the biggest drops that I've seen, and that's when the Fed really had to come in because they had locked up. The credit markets have locked up. To me, it looks like yields. I know a lot of people are talking zero on the 10-year.
Yeah.
But to me, it looks like the 10-year is turning and threatening, and the 20-year bond may have some problems if this is a failing rally. What do you think is going to happen with rates? Could bonds also fall prey to a liquidity crisis where
Sure.
rates go up, not because the Fed is tightening and not because of economic growth, but just because supply is so great and there's not a lot of demand? So to roll it over, you have to keep paying higher
Sure.
yields. Could
Yeah,
that happen?
I think that could easily happen. But what I will say is that, you know, in my opinion, the idea that the U.S. is going to be unable to fund the U.S. government while, you know, Europe will still be able to fund their governments, and Australia will still be able to fund their governments, and Japan will still be able to fund its government, I think is wrong. So I think the point you're making is a good one, and I think yields could rise on counterparty concerns. But if that happens, I don't think that we get into a situation where yields are rising in the U.S. but staying at zero or lower for the rest of the world.
Okay.
I think we will get into a situation where the United States is the lowest yielding major sovereign again. Now, whether that's
Okay.
because the U.S. goes down lower or because the other sovereigns, you know, start to rise on the same types of concerns, I'm not sure. But on a
Okay.
relative basis, I would expect that traditional relationship to reemerge.
Okay, so know your views on the dollar and long-term gold bull. We
Yeah.
did put in a nice little reversal day. We have a possible little reversal week and hit some of my targets. I mean, technically we had a triangle and we've broken out of it. And I guess as long as we stay above 1720, you could go look for higher levels, but
Yeah.
it might be a fake out breakout if we start taking that out.
Yeah.
What are your views here? I mean,
Yeah.
I know that you're one of these gold guys that doesn't think it's always right to buy gold at
Yeah.
any level.
Right.
What are you
And
thinking in here?
well, I'm not buying gold in these levels, and listen. I'm not telling everybody to go out and sell their gold. I think gold's a crucial part of a diversified portfolio, especially in times like this.
Right.
But I would not be adding right here. If you don't own any gold, then yeah, I think you should probably just buy some. It doesn't really matter what the price is. But if you're
Yep.
if you're looking to get a big allocation, I wouldn't go out and just buy it all right now. I do
What would?
think I
Oh,
sent
go
out a
ahead. I'm sorry.
tweet. No, sorry, I sent out a tweet last week, somewhat jokingly, but also serious, saying that you could see, and I said you could see 3 years worth of gold action in the next 3 weeks. And what I meant by that is, you know, you're showing this little mini breakout here, as I was expecting that to happen. But I personally don't think it's sustainable. So, but I saw some things that made me think that gold might spike higher. We got that spike. It still wouldn't surprise me if it goes even a little bit higher than this. But
1690 maybe.
yeah.
I mean,
Or
1800. Yeah.
I test the 1800 level wouldn't surprise me at all. But
Yeah.
then I do think that, you know, as we get into early June and maybe even July, we get another pullback, and then we just kind of got to wait and see from there. This, you know, sentiment.
What level would you be say be attracted to put new money into?
Well, I think if
1350.
yes, around 1350. And then, you know, the other thing is that if we can get to like the 1800 level and stay there for a couple of months, you know, maybe that, you know, maybe that's it, you know, maybe I
Yeah,
would change my mind a little bit, but just with the way things are right now, and we saw what happens in a spiking dollar scenario, and it didn't even spike that big, but you know, when the DXY went to 104
yeah,
back in March, you know,
right.
all assets got liquidated, even gold. I think gold dropped 150 bucks in a couple
Yeah,
days or
yeah,
a couple weeks. And
yeah.
again, I don't think people wanted to sell their gold. They had to sell it to meet margin calls, right? And
Right.
I think it's possible, because if you look at and a lot of people in the gold world hate it when I say this, and rightfully so. If you look at the commitment of traders positioning, the commercial short position is still very large. Now it's come down a lot in the last 6 months, but it's still very large. And as a percent of open interest, the commercial short position is as big as it's ever been. And that means that the speculators are as high as they've ever been as a percent of OI. And what that and like it or not, gold is priced in the COMEX or in the futures market. And all of those traders trade on high levels of margin. That's just the way futures work. And so when you come in and you buy a bunch at these, these lofty levels, and then it goes against you, these speculators, because they trade on such high margin, they have to liquidate. And when it starts going through against them and hard, it creates this vicious move to the downside. And so those are just a couple of the, indicators that I look at that tell me to maybe just be careful, and that maybe, it isn't the time to throw everything into it.
All right. The other big feature that really gained momentum over the last few weeks, and it's something that I've been talking about for a while, but finally has been manifesting in a pretty big way, has been the gold silver ratio here.
Yes.
Back in March, you got for 1 ounce of gold, you got 124 ounces of silver. Now we're back near the 100 level. Any view on this? Is this a correction and gold could take the lead again, or could this be a major turn?
Well, I'm glad you brought this up, because this was it's a really interesting. This is a chart that I have been following for years and years. And,
so then you're like me. You remember when it was 40?
Yeah. Well, and then if you look at this red line that you have in here, I remember several people, excuse me, several people would tell me, that's the resistance, that's the time to buy, because that's, it's very close to the all-time high. And every time we hit that, then silver rallies. And I kept saying, I think we're going to break through that. And if we break through that, we're going to go back to an all-time high. And that's exactly what happened.
Yeah.
And I actually thought, so silver had it was mostly because silver got killed more so than gold, right?
Right.
Silver, gold had that pullback, but silver just got crushed.
Right.
And so now I think we're kind of retracing. I think if we're going to, if I think silver really needs to get below this red line again and stay there. If we were to get below that red line,
this one, Brent.
Yeah,
right here?
down in that area. The 88,
around 90. Yeah. Okay.
If we could get back down below that and then maybe come back up and retest it and start going lower again, then I'd say, that's a pretty good signal.
But, I look at this, and it's one thing I teach is when you have highs where momentum is confirming the high.
Yes.
But it's not a high. It could be a top, but usually it's not the top. There's always exceptions. That maybe, so I could kind of hear it in your voice, because you wanted to negate this breakout, that if all we have here is this was 20, and from 116, equality is 96, where this could just be corrective, and we have another big rally again.
That's right. That's right.
Is that kind of in the back of your mind?
Exactly.
Okay. See, we're a kindred spirits, Brent. Brent, I really appreciate you being here. Any last thought in the middle of, this pandemic has been a little easier for me to trade than the last one because I didn't have a computer in 1918. But you have any feelings as far as the virus?
Well, I'll just leave people with this. And, I before this whole virus broke out, I was saying that we were headed towards a currency crisis. And I think one of the reasons was that with the increasing amount of debt, the velocity of money was slowing down lower and lower and lower. Well, the coronavirus just brought the velocity of money to almost zero. And, and all of the stuff that has been put in place in the last 2 months to combat the coronavirus has just made the overall problem bigger. In other words, the amount of debt and the amount of bailouts and that kind of stuff. So the problem is still out there. Velocity of money needs to be much higher than it is to avoid this currency crisis. And I just don't think we're going to have it. So I would just say, again, you do a great job with the charts. I don't really have anything to add to those, but from a fundamental basis, the demand for dollars outside the United States is incredible. The demand for euros outside of Europe is not really high. The demand for Brazilian reals outside of Brazil is not really high. The demand for the Indian rupee outside of India is not really high. But demand for dollars outside the United States is extremely high. So don't just focus on the supply, focus on the demand as well.
I would love to see you and Peter Schiff have an interview debate together. I'd love to line that up. So, Brent, I really appreciate your insights and being able to stand up against traditionally what's happening in your arena of everyone being a dollar bear, and your patience for having to explain what you talked to us about today over and over and over again. I suggest that you listen to Van Morrison's song, "Why Do I Always Have to Explain?" And
well,
huh?
I'm happy to help people, and that's probably why I try to do it. If we can save a few along the way, it'll be worth it.
Yeah. Well, thank you, my trading warrior brother, and I hope that you and your family remain untouched from this thing, and that you have a great summer trading season. We could hook up in the midst of the dollar blow off and talk about it.
Sure. Anytime. Thanks again for having me.
Okay, everyone, that's Brent Johnson, and you could follow him on Twitter. His Twitter handle is @Santiago AU Fund. And that's a wrap for Turnaround Tuesday, everyone. We'll see everyone tomorrow. And have a great day trading. And I'm going to just end this. Adios. Thank you again, Brent.
Thank you.
Also, oh yeah, I forgot. Don't just count your Krugerrands and your Eagles and your bars. Count your blessings. See everyone tomorrow. Adios.